Hello, everybody. Happy Hallows Eve of the Halloween. It's October 30th. This is Three Amigos. We're sitting here on a Friday morning where the markets are really moving and shaking ahead of the volatility event this coming week that we all knew it was coming. Joined by Dan and MP from Colorado. MP, how you guys doing this morning?
Well, it kind of looks like I'm in my my old high school bedroom right now in the basement right now. But
did you live in a wine cellar?
I lived in a wine cellar right next to the creepy old guy.
I was gonna say, it looks like you're in the office with the brick walls.
No, I'm in Basalt right now. I am do not have internet out at the house, or I do have internet, but I have email internet, or as they call snail mail, which that's all you can really do on that internet.
Basalt, so good fly fishing. Good fly fishing.
Some of the best in the world.
Yeah.
Frying pans were right up the road.
Absolutely. Well, we got not to be cliche, but we got some scary markets. That's me hitting the drums going on this week. We kind of talked about how everything would be kind of range bound while we're trying to see what shakes out the election, but now we're getting to that point. And also we got some new externalities in that COVID is back with a vengeance in Europe and the US, setting new records. It's reaching into a lot of places it didn't before. Yep. So why don't we start out by talking a little bit about the huge volatility that we're seeing this week and how we're playing it into the election.
VIX is just shy of 40 right now. We've got, I mean, Jack, you've said this 1,000 times over the last month. It's like
hold on, Hodgman, for those listening, 40's high.
40's really, yes.
Yeah.
So keep in mind, prior to COVID and whatever was happening, so go back to January of this year, we were sitting like 12 or 14. So we are super high. Those that you follow me on the recap, we've checked the VIX every single day since March. And we've basically said, all right, we're up to 20. We're pretty high. We're 25. We're high. And then we see those spikes. We saw it spike to 90. We're halfway to 90 almost. You know, we're getting up there.
We used to play Uno in the pits when it was below 10. When the VIX was below 10, we knew that the markets were so dead, the window of opportunity would literally open and close right away in the day, that we'd sit down and be like, all right, after kind of the open, it'll just die.
Yeah, and it's been
how much money were you guys putting on the table to play Uno in the pits? I know how much we were throwing up just for the stupid stuff of like betting who's going to score the first game in a Hawks game.
Each pit was different. There's a gambling pit. My pit was not a gambling pit. We were all like,
so
if we're not making money, we weren't gambling.
You were like the $1 card table on the 90s Bulls playing. You weren't at the Ron Harper, Michael Jordan high money table.
Well, Jack, we were at the nickel slots.
There was a guy that used to walk around on the floor every Super Bowl doing squares, and it was like 10 grand a square.
10 grand.
And he'd have $1 million. That's the way to do it.
He'd have $1 million sitting in a safety deposit. Okay,
yeah,
cool.
Give you a key.
You could. Well, I just want to explain to them too. The VIX is derived from options premiums, and it's a really good way to see, especially when it's talking about forward volatility, when the shit's going to hit the fan, essentially. And one of the things that's been problematic about this current rally, it's unusual to see the market pushing all-time highs with the VIX at all-time highs. I believe this was the biggest outlier of when it was hitting highs a couple weeks ago. The S&P and everything else of having the highest VIX while it does that, which means people are expecting volatility. And usually with the VIX, it's downward moves, right? It's not saying like, we think that the VIX is high because AMD is going to come out tomorrow and say they discovered cold fusion. No, it's because there could be issues with the election. There's probably going to be issues with COVID. It certainly seems to be the case. So I think we all got to be putting on our risk management hats again, because this is going to be a wild ride.
It's going to be crazy. I mean, we were just talking about that before we clicked in, just like, how are we even anticipating this? I mean, you've got to be so careful going into Tuesday. We're seeing ranges already starting to expand. The one thing I want to point out is we're not too far off all-time highs. 5-6 years ago, 8 years ago, hearing 1,000 points down in the Dow. I saw it on Monday, I think, or Tuesday, whatever it was. Dow down 950. Like, that's a huge down day, no doubt about it. But I want to keep in mind like where we stand percentage-wise. Keep in mind the percentages. They're huge numbers, but in relative terms, we're still pretty high in these markets. And so keeping an eye on the percentages, especially coming into Tuesday, we know the limits. We've talked about them 1,000 times. Know the limits.
Yeah, we're
Yeah.
high in these we're high in these markets, not Colorado high, but we're high in these markets. But
Title of the show, Colorado
title of
High.
the show. There we go. But there's nothing right now that I'm seeing, and we've been talking about Congress and stimulus package and are they going to do it or not? Hey, mom and dad, I need my money so I can go into my Robinhood account and creep these markets higher. How are we going to get these markets higher if there's no stimulus, if there's new shutdowns, if there's COVID explosion, so to speak, of a surge, and election and unknown unknowns. So there's a lot of unknown unknowns out there. I don't see how you can drive this thing higher. I know we've been talking about me always being a perma bear on here. I do think there are great opportunities to get short. Like Jack said, volatility is, when it's higher, it usually it slides faster than it glides. And when volatility happens, it slides really fast, stairs down or elevator down or all these other things. So right now,
many
I don't see
cliches.
so many cliches, but right now I don't see it's going to be really exciting to watch. A lot of people.
Well,
it's gonna
MP,
be
my
whipsaw.
favorite cliche about this, which I'll do one of our famous visuals for here right now. We're kind of doing that Wile E. Coyote moment where if I can get to my elbow, where we're running off the cliff because it was all about stimulus this whole time, right? And then it became apparent 2 weeks ago that the stimulus wasn't coming. But because we're still running out there, it's like it didn't look down until there was 80,000, 90,000 cases of COVID a day and Europe shut down. It's like, oh yeah, we still don't have the stimulus. I don't think there's going to be a lot of will in, we'll have to see. And that's why we have to see what happens in the election. So
Jack,
why don't we?
I thought you were going to do Salt Bay. I thought you were going to do the Salt Bay right there.
Yeah, just seasoning my microphone. But while we just talk about this, we'll get into the ES and we'll talk about this stuff through the lens of the ES. I mean, from the time I sat down 5-7 minutes ago, went 20 points up and 20 points down. So
I'm watching as well.
Yeah, it's just, wild volatility right now. And we're only, this is the second to last trading day. Well, third to last, because the Tuesday of the election will be a trading day where we really won't know anything more than we know at the moment. So in these last 2 days, I mean, what can we say besides spread it out and don't catch those falling knives?
Right. I mean, that was our coach's playbook topic this week, trying not to catch that falling knife. If you are going to be trading this, because the first thing I want to say is I'm not going to sit here and tell you not to trade it. I'm going to say it's probably not the wisest idea. Will I be watching it? 100%. Will I probably get baited into doing something? 75%. But I told you guys before we locked in here, I have risk around this. I have a plan around this. I know what I'm comfortable and willing to put on the line with this. Beyond that, it's not going to be worth it.
And then you have the discipline too, to stop,
right.
Because even if you have that on the line, are you going to stop yourself? Yeah.
I've learned on my lesson enough. I go back to 2016. That was before I was with Top Step. That was the best day ever. That night we went totally flat into the night. And we were all sitting at our computers watching it, waiting for the boss to call. We had it up. Boss called, put us all on a conference call, and we started trading together. And we had a really, really good night. So I'm going to be interested to watch Tuesday night and maybe slightly dabble.
Yeah. And just to clarify, when Dan says that was the best night ever in his thing, he's talking about the trade. I don't think he's
like my financial, like my P&L,
Yeah. He also said his best time ever was before Top Step too. So I don't know about that one.
My best P&L was that night.
So maybe let's talk some levels to look at, because I think the big one that is now kind of within striking distance, if things are really going to move, is that 200-day moving average in the ES, which is around a 31.22. So I think that's going to be very, very important, because the 50-day moving average was before.
Without a doubt. Pay attention to all these 100 averages.
Yeah.
I'm looking at, on the downside in the ES, I'm looking at 3160. Below 3160 is where I think this thing could really start to slip. I think from 60 to 20, you got a big room. If you get below 20, we may see a march, no doubt about it. But on the flip side, because I am an optimist, I am the perma bull. I'm looking up ahead too. I'm trying to pay attention to where this thing can go to the upside. You guys, we never know especially with elections, you don't know what the markets think about the outcome of the elections. We have opinions, we can have ideas, we can have thoughts. Economists can tell us exactly what's going to happen, but they're never going to be right all the time. So I'm looking at the upside too. And you guys know my level. Everyone knows my level. It's been phenomenal for me the last month and a half or so, 3,380 up to 3,400, that range. We got to open up our areas that we're looking at. It cannot be finite levels, especially with the volatility. We're going to see 20-point ranges really are going to be a thing of the future here the next week or so.
Yeah.
20-point ranges is also with a one lot in the ES. I mean, it's $1,000,
It's a lot of risk.
10 handles. So that's a lot of risk, guys, if you're listening in. So just be careful with that. Pick your spots. Entries are key in this market. Everybody's like, oh, should I expand my risk exposure?
Yeah, no, you shouldn't.
No, you shouldn't. Well, I think there's ways that you look for better entries and you stay patient.
You have to be a sniper here. You have to
be a sniper.
Lie in wait. If you get one trade, that's totally fine. And that's good because you waited for that entry point. Hopefully it works in your favor. But if you get stopped out, you're not going to be hurt. I've said it 1,000 times. My old man, this is his little dad wisdom that Hogue loves talking about dad wisdoms. My old man tells me all the time, every time I need a little mentorship or motivation, something, it's always never let one trade make or break you as a trader. One trade do not allow one trade to make or break you.
Yeah. And as we transition, we'll kind of transition now into the Nasdaq. We'll talk about this, but I'll give a proposition to everyone out there. If you're defending range levels, I will fly to your place and shake you and then invoice you for the plane ticket. And it will be a much better financial position for you to be in. So that's just an offer that's on the table.
Like a Spirit ticket, or are we talking chartered flight?
I will get a NetJet card and just fly around the country shaking people to defend levels because selling's going to beget more selling here. The upside if this stuff releases, because there's a lot of people. Think about all like the hedging that's going on, with how much stuff has risen. Think about how much for like the year end funds and stuff are getting insurance now to protect their like downside. I mean, if this thing really starts to crash, it's going to slip fast.
And policy changes and everything that's going to come with if new administration comes in, supermajority comes in. I mean, a lot of stuff. This is a big car. It could be same status quo. Trump wins. The House is divided and it jams up things, or it's supermajority and the Democrats try to get back to the Republicans. I'm unaffiliated, by the way, and so it's one of those that it's going to be interesting. It's definitely a trader's opportunity right now to both see, watch, not trade is trading, gentlemen and ladies. So there's nothing wrong with sitting on your hands like this and watching how the market interacts and responds to all the information that's going to be hitting here in the next week or so.
Yeah, Michael,
Nice.
You just said something really interesting. I just wanted to point out. My younger brother called me the other day. He is not a trader, but he's pretty active in his stock market stuff. And he calls me on the open. He's down $2,000. He goes, "What do I do?" I said to him, I go, "Well, Patrick, you are not a trader. So you've got two options here. Hold on to your positions because this is an investment standpoint, or you cut your losses and you wait until after the elections, after things start to settle, and we can get a better idea of things." So I go, those are your two options. You're not an active trader. So there's a difference between investing and trading. Make sure if you're trading, you've got your trading hat on. If you're investing, you've got your investment hat on. They are two completely different things. And don't ever take, "Oh, well, my trade has turned into an investment. I'm going to roll it into my investment portfolio." It doesn't work like that. Two different things.
That's how I became a trader, Danny. I started off dabbling in stocks, and then I'm like, well, I'm going to go ahead and move that one to a long-term portfolio because I'm down pretty big on it. It's going to come back.
Well, we're all fired up this morning. So as we go into NASDAQ and keeping with the trend, I just wanted to point out, and as far as like investing and trading, is that yes, they are completely different. And traders often make some of the worst investors I have ever seen. It's a story like Phil Ivey is one of the greatest poker players ever, but apparently someone told me he loses tons of money in like his other, besides the 5-card holder or whatever, loses tons of money in whatever other games that he plays. And I have worked with more traders that sold all their holdings in 2010, for instance, and went to cash, or whose whole portfolio is like, yeah, there's one, you know, short Netflix or something. It's unbelievable. So
Right.
as we
It's,
transition,
it's a whole
so
different mindset. It's a
yeah,
different mindset. I get it.
Completely.
And you have to play it differently. And I gravitate towards what my personality and what suits me. If I'm gonna risk anything in the markets, it's gonna be on a shorter term play. It's not gonna be on a longer term play. If I'm gonna do a longer term play, I like real estate. There's more Forbes people on that list with real estate than they are day trading or intraday trading. So it's a balance of where you want to park long term decisions that you make financially and short term. And I find the trading is where I get my short-term gratification, and it's challenging in the way I like to be challenged.
Yeah, beautiful. So the Nasdaq is so we're gonna get there. The Nasdaq is relatively higher, but it's also we've said this 100 times before. It's also the prettiest girl at the dance, so to speak. There's a lot of flight to the quality there. Those companies are well positioned for the things that happen. There's no Fuddruckers in the Nasdaq, basically.
No Chuck E. Cheese in there.
There's a lot of like enterprise software companies, things that are the future. Not a lot of, I can't think of another amusing company at this point in time.
Oh, Chuck E. Cheese, huh?
Yeah, like Chuck E. Cheese. I think they're already done. You don't see like people come
leaps and bounds.
You don't see like news stories about like a fight that happened between 12 people at the Oracle office, right?
Over tokens.
Yeah, but the one thing that would be, it is by any conventional metric, I won't say overvalued because that implies that it is overvalued. It could always go higher. I would say it is richly valued. And some people have pointed out with the recent earnings is that there's a dynamic going on a little bit like the tech bubble before, where you see these companies killing their earnings and then the stock like getting smashed on it because
like yesterday.
So there's like a mania of like, you see people that'll buy something no matter what, like X company. Like I won't even name the company we usually talk about, but you see these huge moves on what they're supposed to do. Like they were expecting 10 times the earnings or something like that. So I think that's just something to be careful, but that's more of an investing thing. What do we got as far as levels in the NQ?
So down below, I mean, Nasdaq, I think we have a lot of room to the downside. We haven't been in the 5-digit range that long, but I'm going to keep it in the 5 digits on the downside for now, where my flip point is. I'm looking 10,440 downside there. If we get below that, that's where we can really start to slip. We can really have to looking at those 200-day bigger moving averages that we'll have to start paying attention to below that, to the upside. Obviously, the perma bull over here has to talk upside. I cannot let that stuff slip. 11,560. Pretty tighter range, but those are going to be just a couple areas. Again, areas, not finite levels, that we're going to look for I'm going to look for opportunity. I'm going to see what the market's doing. And I want to be clear when I mention my levels that I'm looking at. If the market touches it, I am not executing a trade. I am watching order flow. I'm paying attention to momentum. I'm taking a look at the order book. I'm paying attention to everything else that's going on. I am just, when it approaches those levels, that's where I'm going to be paying a lot more attention. Between there, ton of opportunity for trade. So many things we can look for. We've talked about all different patterns to look for. We've talked about chart setups to look for. We've talked about 1,000 different things. Those are just two little things, areas that I'm going to say, hey, if I see something develop here, I think I got a really good chance.
Yeah, Danny, I like that because when you, I've always looked at them as levels. I don't call them support resistance. When they come to the level, I then look at it. All right, how is the either the order flow? How is it responding or acting around this level? Is it strengthening up? Oh, it's sitting at the level for a while. Maybe I call it growing legs to make a move. So it's one of these that don't get too caught up in support resistance and say, no, it's coming up to resistance, therefore it's going to be a blah, blah, blah opportunity. Right. Listen to where the market, that's where a trader becomes a trader and an investor can't play that game. Right. When it comes to these levels, you can start to understand how to play them.
can only be found in hindsight. We can look back and go, that was resistance. But as the market approaches, we don't know what it's going to be. It can be a springboard. The market can hit it and totally return, or it can be an accelerant. The market touches it and explodes the other direction, like explodes in that direction. So it could be multiple things can happen, or it could just sit. So many things can happen, and you just have to be cautious.
So I like talking about the levels, Danny. I like those levels. I was just looking at the daily chart too. That we're below the 100 period moving average. I'm a simple guy, SMA, simple moving average guy, and 50, 100, 200. I always look at that as like the speed bump 50, the stop sign 100, and the Great Wall of China hard to get through 200 period moving average. So remember, it can go to these levels, it can flex through them and pop back out of them. So just these are levels. So we're gonna talk levels.
What is that? What is that acronym that we use? Is it BFRN for the
BFRN, big fat round number?
Big fat round number. Well, we're going to see the convergence because Michael was talking about the 200-day moving average. If you look at the Nasdaq chart right now, we have the convergence of a 200 period moving average and a BFRN at 10,000. So that could be something to keep your eye on. That's
psychological spooky number.
Psychological.
A lot
spooky
can happen down there.
Halloween, the spirit magic of the markets. All right, that's good. Why don't we just close things out hitting on the Dow a little bit? You want to talk some YM?
Big old Dow 30. You got a lot of companies in there.
Still there, still ticking.
The millennials are coming in.
Day.
They're at the 200-day. Millennials are there.
How come I feel like the Dow's suck and win trying to keep up with the S&P and Nasdaq?
It's
because that's a perfect analogy for the Dow. It's suck and win. It's like a 55-year-old guy that ran cross country,
and just
in high
the
school.
baton off to the young Salesforce guy.
Yeah, but it's still not enough. He's still needs some medical attention,
pull
right?
The whole team. The 800 relay here, and Salesforce only gets that 200 yards to run.
Someday we're gonna look back at the friggin' Dow, and it's how it's weighted by price.
By price.
And be like, why did we do this? Why were we dealing with this?
Here's my thought. We've always used the Dow has always been the benchmark. To this day, it is still the benchmark. But how much longer is that going to happen? I mean, I'm starting to see more people everywhere in all aspects focus S&Ps, focus Nasdaq, kind of less talk on the Dow. I mean, you still get the notification at the end of the day. Dow closed this. You still get the Dow's closed, but they talk more about the other indices. Yep. At some point, I feel like we're going to transition away from the Dow as the benchmark, or we're going to have to reset everything in the Dow.
I agree with you, Danny. I agree with you 100%. I think Nasdaq might be coming out the leader just because it's a millennials like that index. But hey, you know what? I think that's a different topic, but I do think that could be on the horizon here in the coming years.
Disrupt the Dow. All right. Well, anybody got, any tricks or treats coming up? I'm going to leave that in for next week.
Next week? There's going to be just a lot of that.
We're getting to the point where we're going to be signing off soon. So I was thinking if there's one sage piece of advice, or we could talk about Lil Wayne meeting the president, the other big news.
My little advice is keep the powder dry. I've always heard that line, keep the powder dry. What that basically means is you're not deep into anything, into positions. You're almost even flat, and you're watching for your opportunities. Because why do I think that? Because like Jack, you just said, volatility is high, opportunities increase. Both, you said volatility, usually when it's high, it kind of slides, but it's been going both ways. 50 handles up, 50 handles down, 100 up, 100 down. Lots of opportunities. And if you're in there grabbing bits and pieces, then if you keep the powder dry, you're open and able to capture something.
Sage advice there. My advice going into next week. Does not matter if you're a pro-Trump or pro-Biden. Drop the bias. Do not trade with that input. You may think, okay, it looks like Biden's going to win, or it looks like Trump's going to win. It doesn't matter. The markets do not give a crap what you think. It's going to do what it wants. Everyone can sit here and say, if this person gets elected, this is what they're going to do. And if this person gets elected, it's going to do the opposite. It's not going to be the case every time. Do not go in with that mentality. I cannot stress this enough. if you have a bias or if you are emotional in this, which I know a lot of people around the country and the world are very emotional in this election more than ever, don't touch it. Just stay away because you're going to get hurt. You might have that chance that, hey, like I said, in 2016, we had such a great night. I have to drop every bit of that coming into Tuesday. That's not a thought process. That goes out the window. It's all about that risk management. If you are active, have a plan, know where you're done. And I swear you have to find that accountability. I will not touch this without having an accountability partner sitting next to me to say, all right, we just hit that point. We're done. Like, I need someone next to me before I do this, not on a phone, not someone I'm going to call afterwards, someone that's going to take the mouse out of my hand and smash it on the ground and be like, you're done. Like, I got to have someone there.
Danny, can I add one line to your thing? And there will be no trade that you should be looking at that's going to make you or break you next week.
Hey, that's a good one.
Absolutely. Dan, you hit my trick, which is trade with your head, not with your heart. My treat, let's end on a positive note. I love Halloween movies. If you haven't seen the classics like horror comedy, Shaun of the Dead, Cabin in the Woods are great. I watched The Thing for the first time last night. It's on either Hulu or Netflix. Great, gross body horror and Kurt Russell stuff if you're into that. Anyone else got a few picks? And then we'll sign off.
I have not watched this. I watched, I think, like Dale and Tucker versus Evil was like the closest thing to a scary movie I've watched in the last 5 years.
Oh, man, Army of Darkness, original Halloween, Day of the Dead, Dawn of the Dead, Night of the Living Dead. Great movies out there because this weekend should be a little bit of fun. The news is going to be there.
I don't know. Weekend at Bernie's was pretty scary to me as a kid.
Because that was your worst fear, MP, that you would die and then be controlled by two schmucks. Super specific. Well, anyway, we hope that doesn't befall you, Michael. And everyone out there, stay safe. Only trade if you have a plan. Stay objective. Everything Dan said. And we'll see you next week. And when we see you next week, we'll know a lot more than we do now. So that'll be fun after all this ramp up.
Absolutely.
All right, everyone. We'll see you later. Bye.